Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Schuller here in studio at the Stock Exchange. Well, a busy week on Wall Street. Investors this morning are digesting the latest earnings results from Magnificent Seven stock Alphabet. It's the parent company of Google, and shares are sliding early Wednesday after revenue disappointed. Well, Alphabet is ramping up spending on artificial intelligence like other Magnificent Seven stocks, and we'll talk more about its results throughout the show. Let's take a look at what's on tap over the next hour. And as we approach Sunday's big game between the Kansas City Chiefs and the Philadelphia Eagles, the Super Bowl ads are rolling out, and we'll be joined by agency Goodby Silverstein and partners to talk more about what we should expect to see this year. Plus, consulting firm EY, formerly known as Ernst & Young, will share its latest in the blockchain technology space and how companies and consumers can tap into it. And after ringing the opening bell here at the exchange, real estate firm Compass will join my colleague Trinity Chavez. Its CEO is in the house with the stock up pre-market. Meanwhile, investors got a glimpse of the state of the jobs market less than an hour ago, receiving fresh ADP private payroll data for the month of January. And according to this data, the U.S. economy added 183,000 private jobs last month. That does not include government jobs. We did see that number was higher than expected, and in fact, the number before that in December revised higher as well. We'll next hear from the Fed in March on the state of the labor market and, of course, inflation. And we'll continue to cover the data, including the non-farm payrolls report that we get on Friday. Well, joining me now to take a deeper look at the markets amid jobs, earnings, and trade talk is Sylvia Jablonski, CEO and Chief Investment Officer at Defiance ETS. Sylvia, welcome.
Thanks so much for having me. Happy to be here.
Happy to have you as well, and so much to talk about in the markets these days. What are you watching most closely?
Yeah, I think, in the near term, I'm watching a lot of the talk around tariffs and trade talk. I mean, that obviously moved the market on Monday, and then it kind of recovered Tuesday. We have to see where all of that lands, and whether that ends up being a fentanyl story or whether that ends up being an onshoring story. And I think there will be a big difference in terms of how the market reacts. I'm also watching earnings. The market didn't love what they heard from Alphabet, and I think we'll kind of have to see how earnings roll forward this season. But if you look at the numbers so far, I think it's about 77% have actually beat on revenues and close to that on EPS. The overall economy is in a strong spot. Corporate earnings have been good. I think we're all just really salivating for that monetization of AI, and we're not satisfied with it. So let's see what kind of trucks on with this.
Yeah, so we've seen some choppiness, but the market did end January higher. The Dow leading the way, up more than 4%. Certainly this week it's been extra choppy. What do you recommend to your clients in this environment?
I mean, when I saw the market pull back on Monday, and this is kind of how I've been reacting, this has been a buy on the dip market. And the reason for that is that, GDP is between 2 to 3%. Corporate earnings have been steady and strong. Maybe we're not meeting these stellar expectations that the market keeps putting on these big firms, but earnings for all intents and purposes are pretty good. Jobs are steady, consumers are spending. There's a lot of reason to believe that we're still in that soft landing. We have a president that's pro corporate America, pro markets. It should be a good year. And so when you see stocks falling 5-10% on any day, and they're the stocks of the future, like the Googles, Amazons, the quantum names, the AI names, I'm a buyer on the dips, and those are my good dollar cost average days.
I'd be curious to know your takeaways from the other Magnificent Seven stocks that we've heard from so far during this earnings season, 4 of them, in fact, last week.
Yeah, I mean, I think some of those reports were a little bit healthier and happier for the market, right? I think the market I expected Apple to be a little more negative than it was, but I think the overall feedback there was that growth in services was pretty good. And then, if they actually get that upgrade cycle and they kind of get that AI cycle, which they're seeing, higher purchases in countries where that AI intelligence is there, that company could still have some room to run. But I think overall, again, corporate earnings are pretty strong and solid. We're just expecting a whole lot.
When it comes to artificial intelligence, Oracle also has a play
Yes.
here. It is an NYSE listed stock. What are you watching when it comes to Oracle?
So Oracle has just been one of my favorite stocks for the last year or two. And it's funny because I think it's almost like this forgotten tech stock, like IBM and Oracle, everyone pushed them to the side. But when they were pushed to the side and not in the news, they've been doing so much R&D on quantum computing and AI. And now it turns out that Oracle is poised to be one of the top AI infrastructure plays in the market. They also have this potential tailwind coming from government spending on the Stargate project. I think it's $500 billion, but $100 billion being deployed now. And, valuation-wise, it looks a little bit like a better buy than some of the other Mag 7. So I think AI leader, AI cloud domination, it's a stock that's doing quite well.
How do you discern basically outperformers in this artificial intelligence space, knowing that it is still relatively nascent?
Right. And so I think you kind of have your outperformers, but I think what we as investors have to do now is look at it across sectors, right? So NVIDIA is arguably the winner in chips so far, right? We'll see what happens in years to come. And then, you have AI infrastructure and energy, and that could be companies like Vistra, GE Vernova, Constellation that are doing really, really well. They're the powerers of AI, the energy behind it. And then, again, like the Oracles, the Google Alphabets with Willow and their cloud presence. And then you have the supercomputing companies like Quantum, IonQ, Rigetti, D-Wave that are also part of this, and they're kind of that next generation of AI.
It sounds like those are some of your investment themes this year when it comes to AI, quantum. What other major themes are you coalescing around?
Yeah, I think, a lot of it is going to be, again, these subsectors of AI. So the AI energy play, AI infrastructure, quantum computing, data parsing, physical AI, things like this. I also think that we've forgotten about the connectivity that's required to get AI to go. So that 5G, 6G theme, mobility, that lower latency in order for this to run. So I'll be looking at some of those names that have been a little bit forgotten too, whether it's the American Towers or the Verizons or, kind of these more communication style names.
We do see reactionary responses to the tariff talk and the trade policy that we've seen first announced by the White House on Saturday, and of course, the ensuing news, including retaliatory tariffs by China just throughout the past few days or so. Are there sectors that would see their earnings impacted by these tariffs?
Yeah, I think I think the market as a whole will more or less react negatively if the tariffs go into effect the way that they are. But I also think that there's a very low chance that they go into effect the way that they are. What might not suffer could be things like small caps, like U.S. onshore, and I think ex-Mag 7 would bode better than, say, Mag 7, right? So the other 493 names would probably be less affected than the top 7, even though it's not, kind of obvious that they're the ones that are getting, the tariffs placed on them. They're just the market leaders and the highest beta stocks, and so, they take a hit.
All right, Sylvia Jablonski, CEO and Chief Investment Officer at Defiance ETFs. Sylvia, thank you so much.
Thank you.
Great to hear from you. All right, well, stay with us because up next, the Super Bowl is quickly approaching, and we'll take a closer look at one ad agency's strategy for this year's big game. That's next.
Today we're taking you behind the scenes of Summit One Vanderbilt. This extraordinary destination offers stunning views and immersive experiences, providing a truly unique perspective on a city that never sleeps. That was the most incredible elevator ride I've ever experienced.
Yes.
How long did it take us to get up here?
35 seconds to go from the ground floor all the way up to the 91st floor. It's pretty incredible.
Pretty incredible, and the experience starts the moment you step into the elevator.
Absolutely. We take you from one room and one experience to another to help transition you. And right now in the Hall of Light, we're about ready to go into Transcendence. You ready to go in?
I'm ready.
Perfect.
Let's go.
Let's do this.
Wow, this room is amazing.
Wow is right. We are in Transcendence. We are on the 91st floor here in One Vanderbilt, and this room truly is spectacular. It's probably one of the most Instagram locations in the entire world. We are in probably the most famous and most sought after room in all of Summit. We're in Affinity. And what this really speaks to is Kenzo's vision of play. By no means is One Vanderbilt or Summit an area of being passive. We encourage you. We want you to be part of the installation. Here, you become actually involved within the installation of the space. Obviously, from the balloons themselves, people that come into this space are able to make it their own. They're able to come through and actually see the world in a much different component. They really are. It's a unique view that you're not going to get anywhere else in the world. I would even encourage you, quite frankly, to help come through with me. So we have people who come here who automatically know where they want to stand, what they want to wear, and quite frankly, the type of picture they want to take, because they know it's going to be shared all across the world. And that's the most amazing thing here. People are evangelizing the product for us. They're evangelizing the Summit brand, and in doing so,
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. While the Kansas City Chiefs and Philadelphia Eagles will look to take care of business in Super Bowl 59 on Sunday, an array of companies are looking to find pay dirt in the business of Super Bowl ads. I want to send things over to my colleague, Trinity Chavez, who has more on this story. Trinity, good morning.
Hey, Kristen, good morning. That's right. One agency that knows how to make an impact is Goodby Silverstein and Partners. From Doritos to Cheetos to BMW, they've helped deliver some of the most iconic Super Bowl ads of all time. Now, to talk more about this year's big game and the evolving landscape of Super Bowl advertising is Margaret Johnson. She's the Chief Creative Officer at GSNP. It's great to have you, Margaret.
Thanks for having me back.
It's great to have you here at the Exchange. Now, you're in New York City. You've made a few announcements this week. You are going to be working again with Mountain Dew. They're going to be running a Super Bowl ad, as well as Doritos. Talk to me about everything that goes into creating a successful Super Bowl ad.
Well, there's two main things that we try to do. One is to make sure that it's a super simple idea. People are at parties, they're drinking, there's a lot of distractions, so heavy dialogue is something that you kind of try to avoid in this case. We also try to keep it funny,
Yeah.
It's the Super Bowl. People want something entertaining, they're there to have fun. I think for lesser known brands, a lot of times innovation is a great way to just hack the Super Bowl and really cut through. Reddit did that a couple of years ago. They took out a 5-second ad, which I don't think had ever been done before on the Super Bowl, and it just looked like a Reddit post. And I think people were so shocked because it was just so different from everything else, right?
I was going to ask you that. So what sets a truly remarkable Super Bowl ad apart from everything else that's out there? I mean, there are some massive competitors out there, some really big heavy hitters that are buying these spots during Super Bowl. So what makes an ad stand out?
I think great storytelling, right?
Yeah.
People are there to be entertained. It's the one time a year when people are actually leaning in and wanting to follow all the commercials that they're going to see on the game. So it has to be entertaining. It has to have a great story arc, a great beginning, middle, and most importantly, it has to have a fantastic end.
And I do want to talk to you about the implementation of AI, Gen AI, how you're seeing these brands and these companies integrate this technology into the whole user experience when it comes to the advertisements during Super Bowl.
Yeah, it's funny, just as an agency, we've been using AI in our Super Bowl spots since 2020.
Wow.
We first used it for a Cool Ranch Doritos spot. We had a funny spot that was about it was an homage to the good, the bad, and the ugly. So instead of a shootout, Lil Nas X and Sam Elliott actually had a dance-off, and
oh, nice.
Very funny spot. But then we wanted there to be a second screen experience so we could bring the audience in, so it was more interactive, right? That's really important. You want it to be interactive and include the audience.
And these spots are going for millions of dollars. I think upwards of $8 million for a 30-second spot. And last year, viewership for the Super Bowl almost topped the moon landing. I know we were talking about this in one of our initial conversations. And so why do you think these companies are paying such a hefty price for this 30-second spot? And do you think that it's worth it?
Well, it's interesting because a lot of people are asking that. Like, is it worth it? It can cost from $7 to $8 million for 30 seconds on the Super Bowl. But we have to remember that it's still the largest collective viewing experience that we have in the United States. We haven't had one like that, you said it, since people tuned in to watch the moon landing in 1969. But considering that there are 123 million people watching the Super Bowl. It's 100% worth it if you want to make a big impact in culture.
How do you think the current climate that we're in is really shaping the way companies approach, the way they're strategizing their ad advertisement?
I think like people are leaning a little more into humor. You know, I think just there's a lot of heaviness around us in the world, and I think people need a release. So I think you're going to see a lot of humor on the Super Bowl. That's one of the big things.
But how do you balance that? How do you strike that perfect balance, rather, from honoring the legacy of these brands, but also pushing creative innovation forward?
You know, one of the brands that immediately comes to mind is Budweiser, right?
Yeah.
We all have those brands. We're like, oh gosh, I wonder what their commercial's going to be this year, and Budweiser is one of them. We all look forward to the Clydesdales and, you know, what's going to happen with the Clydesdales during the Super Bowl. So that's a legacy brand that I really admire because they're true to their DNA. They're true to who they are. As far as like, you know, creativity and really knocking it out of the park there, I think it's a great opportunity for brands that are more challenger brands, right? Ones who really need to punch above their weight. A few years ago, one of our clients is Sam Adams, and we saw an opportunity because Budweiser wasn't going to be on the Super Bowl. So we did a spoof of a Clydesdale spot for Sam Adams where we took our character, our cousin from Boston, and had him unhitch the Clydesdales and let them run loose and wreak havoc on a city.
Yeah.
And it was a huge hit. It was only a regional buy for Sam Adams, but it kind of was across all the big Super Bowl roundup, you know, PR that was happening. So it was a big win for a smaller company like Sam Adams.
And Margaret, Goodby Silverstein has worked with some iconic brands, including Cheetos and Doritos. Talk to me about some of the lessons that you have learned working with these iconic brands and what you've applied to where you sit today.
Yeah, I think I mentioned it before, but I think keeping it simple, keep it funny, people want to be entertained, and I think at the end of the day, you want to make stuff that people actually care about and put that on the Super Bowl, right?
And leave a lasting impression.
That's right, that's right. And that's our mission as a company, and it totally applies here too because that's what keeps you relevant.
Amazing. Well, Margaret, it's always a pleasure speaking with you. Again, Margaret Johnson, Chief Creative Officer at Goodby Silverstein and Partners. Thanks for joining
having
us. Now, coming up, the leader of Ernst & Young's Blockchain Technology Division is joining us to discuss a new partnership and how it will improve the traceability of donations. So stay tuned for that. You both are coming to the exchange today to share the major news announcement. Why don't you tell me a little bit more about it?
Yeah, so we just passed 200 million in annual recurring revenue, and I met you last time 14 months ago when we made the first announcement, and so we're super excited. We're growing 70% year over year, and it's just due to the amazing success that we're providing to our customers.
Abby, would you like to add to that?
Such a whirlwind being at Cribble. Like, I'm so proud of us, and to take 4 years to get to 100 million and then start, double it in 14 months is pretty exciting space to be in.
That's hugely significant, especially the time period that it all occurred. So what would you attribute this momentum to, and how do you think they're going to continue to leverage this fundraise?
First of all, back to the customers, it's about the value that we provide to them. It's an underserved segment. It is people who are running the systems that run the business, and the top growing companies in the public markets are growing at 30%. We're growing at 70%, and it is all back on the value that we provide to customers.
Abby, from your vantage point, how are you going to continue this momentum with growing those client relationships as well as enhancing your bottom line?
Well, our number one value at Cribble is to be customers first always, and we're constantly focused on how can we do the next thing that solves the problem that nobody else is solving for them. And so one of the things that I'm really excited about is that when we talk about our solutions and our ability to provide a data engine specific to IT and security, one of the gaps that we had was that we were able to provide analysis, but not in real time. And we have an exciting product announcement coming up that I'm going to let Clint talk about a little bit.
You beat me to the punch. I'm so excited to hear about the new product. Tell me about it, Clint.
This is an add-on to our Lake product called Lake House. As Abby mentioned, the biggest gap was I need to be able to ask and answer questions of data that's arriving right now, and I need that to be fast. I need my dashboards to go quickly. I need my alerts to fire really, really quickly. And so with our new offering in Lake House, we can start.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio. Well, blockchain technology has long been touted as revolutionary. With cryptocurrency that runs on the blockchain soaring to new highs of late, it is a good time to take stock of the space. Joining me now with more is Paul Brody. He's global blockchain leader at EY. Paul, it's great to have you on the show here. And from your perspective, what are the capabilities of blockchain today?
So blockchains have so many incredible capabilities that you can be putting to work in the enterprise and financial services markets. Everybody knows about cryptocurrencies. I think increasingly people know about stablecoins, which are things like dollar or euro-backed coins that can use instead of traditional banking activities for international payments and things like that. At EY, we're building applications for business users like contract management. But one of the really exciting areas that's really fun for us is building applications and tools for use in the nonprofit sector. And in particular, we've been working recently with companies to do things like track how much progress they're making on things like decarbonization or removing plastics from the ocean and things like that.
Interesting. Now, of course, your work with nonprofits is a focus for you. So talk to me more about recent partnerships and how blockchain is enabling that.
So one of the newest ones that we put together is with a company called Allot, based out of Scandinavia. And what they are doing is they're actually tokenizing the plastic they remove from the ocean and the equipment that they are using to remove that plastic. So there's an old kind of mechanism in the world of blockchain. It's called proof of work. It's proof that you did certain activities. Well, we're sort of modernizing this with our ops chain technology for proof of the good that you have done for an environmental output. And we see this as something that many companies may start to adopt as they think about doing things like charging customers a premium for sustainable aviation fuel, offering them options to buy a carbon neutral output, or to buy a product or solution that has a zero carbon footprint. People are going to want to see proof of the origin and sustainability of the work that they did.
How can people trust this process and trust the blockchain as a mechanism for nonprofit activity?
So there's two incredible value propositions and one important limitation that people should keep in mind. So in terms of the incredible value proposition, blockchains have two things that are really useful. Number one, they are, if you're using a public blockchain like Ethereum, they are tamper-proof. Nobody can take the data that's on the chain and tamper with it in any meaningful way. So you can't falsify data after it's been recorded to the blockchain. Secondly, you have full traceability. So let's say you are buying a computer that's got chips and hardware that's come from 10 different countries. You have a full record. If all of those things were tracked on the blockchain, you have an immutable, unfakeable record of the origin and the data and activity with all of those items, which is extremely helpful for understanding the real origin and things like the real carbon footprint. So those are really great. The one thing you need to keep in mind is that data on blockchain is only as good as the data participants who are putting it in there, and that false information can also get on chain. So again, you have at least a better record of where it came from, and you can track down the originator, but you have to there's still the principle of garbage in, garbage out that applies.
How do you get organizations to adopt this technology?
It's actually surprisingly easy because this technology has a return on investment. So for business applications like the work we have done with Microsoft, we are able to show 99% reduction in cycle time for contract management. We estimate when we build simulations that companies can reduce their inventory about 20% with the same service level by tracking it on chain. In the case of public services, where you're offering like a zero carbon footprint or full provable organic origin, we have a number of case examples where our clients do get two important benefits. Number one, they get increased revenue, so they get a price premium for the traceability of the product, and they get much better marketing and marketing value and throughput from those activities. People go to their website, they learn about the product, and they do that by following the QR code on the product to learn about its origin and looking at that data on the blockchain. So lots of good ROI there.
How do you see the technology evolving in 2025, Paul?
This is going to be a very finance-focused year. Even though I'm excited about the nonprofit activities, the regulatory liberalization that's going on in the U.S. market right now is going to lead to a tremendous amount of growth in finance. Our own expectation is a huge increase in stablecoin payments as companies look to take advantage of how much less expensive that is than traditional banking services. A growth in DeFi, decentralized financial services, which are kind of on-chain applications for increasing your rate of return in money. And then I hope over time, a significant growth in contract management. So if you think about a business agreement, I've got money, you've got stuff, and we're exchanging them, I'm going to be able to tokenize the money, tokenize the stuff, and digitize the contract and run the whole thing much more efficiently than I can today.
Is this something that you think consumers will latch on to as well or more widely adopt?
So consumer adoption of like cryptocurrencies is already really, really high. Like we have seen kind of global adoption of cryptocurrencies go from 1 or 2%. In some countries, it's closer to 20 or 30%, and it's still rising. So consumer adoption is already kind of well into the mainstream phase. We are seeing consumer adoption of stablecoin payments very quickly. A big deal that was announced just a few weeks ago was in Brazil, every bank account holder at one of the biggest banks, Nubank, has direct access to US dollar stablecoin payments, and we're going to see B2B payment access as well. EY became the first recipient of a B2B stablecoin payment from PayPal, so we're really excited about the ramp of growth there. And I think supply chain and green traceability is going to grow significantly over the course of this year as companies see the ROI and they figure out how easy this is to do.
Paul Brody, global blockchain leader at EY. Paul, thank you so much.
Thanks for having me.
All right, well, don't go anywhere because up next we will have the opening bell.
What changed in Unanchored is the advent of geolocation data on cell phones. And this was largely unavailable until, call it 2018, 2019. That data is so robust that you no longer have to only rely on tenant sales that are reported by the tenant. Now you can rely on customer traffic from cell phone data, which is incredibly robust, and it allows landlords to have information that we didn't have before. That, to me, is what really crossed the Rubicon between private investors making a local bet on convenience properties to now institutions, and us being the only public institution, really, being able to make a thesis that has math behind it that I think is convincing and durable. How frequently do you run an errand to go out at lunch and go to Chipotle? Do you go to the ATM at Wells Fargo? Does somebody in your family get your nails done? Do you go to the barber shop? These are running errands. These are not going shopping. For you to run errands, convenience is key. You want speed, access, and you want it to be in a timely manner. What we've really proven, and this is really through the data analytics, is that going shopping and running errands are two distinct, different property types. And being different property types, they deserve to have their own asset class for effectively running errands. And I'll give you some statistics. 2/3 of the customers that come onto our properties at Curbline are on our asset less than 7 minutes. That's not a going shopping experience. That's not lingering longer. We're not placemaking. We're not making a place where you linger forever or you multiple shop. We want a place that is right up on the road, easy to your house, and you're in and out. That is the biggest asset management question. Do you renew a tenant, or do you replace the tenant? And so this is not an occupancy business where you buy vacant buildings and you lease them up. You're buying fully leased buildings, and the question is always every single year, are you going to renew this tenant or are you going to kick them out and replace them? And that.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Well, in just a moment, NYSE-listed real estate firm Compass will celebrate the opening bell, and my colleague Trinity Chavez has more. Trinity.
Hey, Kristen, that's right. So Compass says that it's on a mission to not only help everyone find their place in the world, but they're also developing what they say is the first modern real estate platform. Now, Compass was founded in 2012 and now operates in more than 22 regions across the U.S., ranging from New York to Boston to Los Angeles and Orange County. I'll be speaking with Robert Reffkin later on after he rings the opening bell. He's going to be there on the bell podium in just a few moments. We should be getting images of that right now. now with the executive team as they get ready to open up the U.S. equity markets. And again, as I said, he'll be joining me in studio to talk about today's real estate market. And here's a fun fact for you, Kristen. In addition to previously serving roles at Goldman Sachs and the White House, Reffkin has run 50 marathons in 50 states.
Well, look, the opening bell, that's about to be a new marathon for him, Trinity. Of course, what it takes to make the way to the podium there. And let's take a listen to that opening bell. Off to the races here. Stocks open for trade after Compass celebrated that open on the Bell podium. You see him right there in the 2 box. Of course, the Compass CEO will be joining my colleague Trinity Chavez here in just a moment. As this market opens, we see just muted action across the board. Of course, comes amid jobs data, earnings, continuous headlines when it comes to trade policy. We cover it all here on NYSE TV Live. And joining me now to talk more about the action in the equity markets is Stash Graham, Managing Director for Graham Capital Wealth Markets. Stash, thank you so much for joining in at the open here. How do stocks look to you?
Like you said, Kristen, good morning. Fairly muted. Certainly, I have not run any marathons recently. It seems like the first month of the year was a big marathon for stocks in general, really all asset classes. But let's see what February brings.
So in terms of what's on your radar in February, we will still have some of these magnificent 7 stocks set to report earnings. A big non-farm payroll report on Friday. That, of course, is for the month of January. Stash, what could be the driving factors this month?
Well, as you mentioned, the market right now from a macro perspective is trying to figure out what the next move for the Federal Reserve is. Right now, the market is expecting 40 basis points of cuts, so 1 to 2 cuts for this year. We recently had some softer inflation data. We saw core PCE come in a little bit softer than expected. Real income hasn't really grown the last couple of months. But conversely, you've seen several inflation LEIs, leading economic indicators, that had started to perk up over the last quarter. So right now, I think a lot of people are keying in on how healthy is the labor market, because in fairness to us, I would consider fading most of the jobs data that you get. The way that they're calculated, there's not a nefarious reason. We've seen multiple revisions over the last couple of years, and some be very material. It's really just the way the data is collected. The survey participation rate is very, very low. It's just hard to get an accurate prediction of really how healthy the jobs market at this current point in time. So I think over time, as you get revisions, Kristen, I think you get a better picture. We know hiring, for example, is still at multi-year lows. Businesses are really trying to figure out headcount.
So what do you recommend to your clients, Stash, in terms of how they navigate this environment from an investment perspective?
Right, Kristen. I think there are certain sectors that really do stick out from a value perspective. We've been bullish on banking the last couple of quarters. Certainly that's easy to say now because banking has been one of the best performing sectors the last couple of quarters. But we still think we are in the early to mid innings on a broader rally within the banks. Right now, what you've seen in terms of the yield curve is steepened. Federal Reserve has cut interest rates by 100 basis points. We've seen the yield curve on the long end go higher. That helps bank profitability. Banks at their core still borrow on the short end and lend and invest on the long end. Then secondarily, and I know this has certainly been talked, so you can make an argument, Kristen, this has been priced in. I think we're still waiting to see it, but we have a new administration. We have new leadership and a new ideology. So if we do get a degree of deregulation within banking, there are several catalysts that can help move the banking sector higher. One, capital levels. There's a lot of excess capital at banks. Say capital levels come down. Well, now banks have additional capital that they could return to shareholders, one in the form of stock buybacks or an increase in cash dividends. And then second, mergers and acquisitions. We've seen M&A be really quiet the last year or two. I think, again, that goes back to the prior administration. You figure with this new administration, you'll see an uptick in M&A, and that certainly helps your community banks, your smaller and larger regional banks, that we think is still a part of a larger multi-decade transition of where larger banks in the need of deposits and customers will acquire their smaller banks.
Now, when it comes to tariff Stash, how are you navigating that, knowing that we have seen reactions in the equity market amid trade policy changes these past few days?
Right, Kristen. And for us, the energy sector, which has been one of our largest sectors, there will be a degree of impact within energy. You've seen what China has responded to, taxing or tariffing liquefied natural gas from the United States. So that is something we're monitoring. I would say right now, with the proposed tariffs on Mexico and Canada, 10%, we don't necessarily believe that 10% is going to move the flows of energy commodities or energy products. Say, like, use example, we'll just use a Canadian oil company. We don't believe 10% is going to really move or incentivize that Canadian energy company to, say, export their goods, because you think about the logistics of that Canadian oil company. They're going to have to ship it on the Trans Mountain pipeline. They'll have to store it. Then they'll have to wait for a tanker to be able to export it. That takes time. That takes additional logistical expenses. Versus saying, hey, look, maybe I'll take 5 to 10% less. Remember the tariff, the American refiner will have to pay for it, but they have a stronger dollar, so they'll probably be willing to eat some of that tariff. But still, for the Canadian energy company, it's still financially efficient or prudent of them to be able to take the lesser price and move it to the American refiner, as they have been for the prior decades.
Stash Graham, Managing Director for Graham Capital Wealth Markets. Stash, thank you so much for joining.
Thanks, Kristen.
All right, well, still to come, global investment firm Cohen & Steers debuts a series of new exchange-traded fund products, and its chief investment officer will tell us why the time is right to do it now. Plus, Compass CEO and this morning's bell ringer, you saw him on the podium there, Robert Reffkin, sits down with Trinity Chavez to explain how his company is using artificial intelligence to help build what it says is the first modern real estate platform. And I had the chance to speak with Easterly Government Properties CEO Daryl Crate about his company's 10-year anniversary here at the Stock Exchange. We'll have all of those stories on the other side.
Welcome to Floor Talk. It's great to have you on the show.
Thank you so much for having me.
So, Josie, congratulations are in order. You are part of the Buffalo Bills ownership group. Now, it was a great weekend for you this past weekend.
Amazing weekend, yes.
Had the family with you to celebrate a win. So tell me, what drew you to this opportunity and how does it fit with your goals?
Yeah, so the process started for me actually back in 2018. I originally had set out to put a group together to purchase the Real Salt Lake soccer team. And it was through that experience where I was approached by a representative from the NFL asking if this is something that I'd be interested in, as the league was looking to be more diverse in the type of LPs they accepted. So right away, I fell in love with the opportunity, and it went quickly, but I'm happy it did. And it's an honor to be a part of such a world-class organization.
Now, you're also involved in ventures like TGL, SailGP, and Footy Market. So tell me, how do you choose what to pursue, and what's your vision as an entrepreneur?
I tried to stick to things that I'm passionate about. And Footy Market is a gear exchange where you can buy and sell used gear online. And that one was close to my heart, being that I spent, my whole life dedicated to soccer. And I'm a big fan of emerging sports. TGL is obviously, golf has been around a long time, but TGL is like a new variation of the game, right? Trying to give viewers a different experience. And then SailGP is more of the same. It's something that we've known people are passionate about in terms of sailing, but now trying to package it all as a league in an emerging sport is something different. So super excited at all my ventures and things that I work on. And, for me, it's another way of being on a team. It replaces being on, a field. So I've been having a ton of fun, and, it's just the start.
And Josie, as you grow your business portfolio, how are you building a legacy that's beyond?
Welcome back to NYSE TV Live. I'm Trinity Chavez in studio at the New York Stock Exchange. Now, with inflation, interest rates, and geopolitical uncertainty shaping the investment landscape, real assets are playing an increasingly important role in investor portfolios. Cohen & Steers, a leader in real estate assets and real assets and alternative income, is now expanding into the active ETF market. Joining me now to break it all down is John Shea. He is the President and Chief Investment Officer at Cohen & Steers. John, it's great to have you with us in studio.
It's great to be here, Trinity. Thank you so much for having me here, particularly on this day when we're launching 3 new exciting active ETFs.
Absolutely. So let's dive into the news, right? We have to lead with the news. We can't bury the lead here. Talk to me about this announcement, how it's going to shape the broader landscape and how it's going to impact investors.
Yeah, so look, for those that don't know Cohen & Steers, we're a specialist asset manager really focused on real assets and alternative income. We've been doing this since 1986, and we also just celebrated our 20-year anniversary of being a public company. But we're real market leaders in these areas. Investors know us, but we haven't had active ETFs before. And for a lot of investors, they've said, Cohen & Steers, we love what you do, but we'd love to see it in an active ETF form. So that's why we're so excited to be able to address the market with these 3 new active ETFs in areas that we're very known for. So that's real estate, prefers, and natural resource equities.
And with the new administration, microeconomic environment that we're currently living in, how are you approaching advertising for your clients, and what are the key trends that are shaping your outlook?
Yeah, so look, I'd say the most important thing I tell people is don't worry about tomorrow or next week, because the reality is no investor is going to be able to get the next 5 days correct. So we want our investors to focus on where they want their portfolio to be the next 2, 5, 10 years, things like that. So the worst thing they can do is just look back at what's worked in the last 5 years. We've done research, a paper called FOMO, Reversals of Fortune, and there's a perfect track record that if you just look back over the last 10 years and just try to follow it, that's not a good solution. Instead, focus on where valuations are attractive. So places like real estate, natural resource equities, and preferreds, we're launching in these areas because we think valuations have repriced, and so the opportunity for investors, ETFs or not, is very, very attractive. And as we all know, every day, equities have done well, particularly in the U.S. over the last 3 to 5 years, but valuations have gotten less attractive. And so for us, we want to put things out there where it's not about how have they done the last 5 years, it's about what we think they can deliver given where valuations are.
John, I want to drill down a little bit on this, especially when it comes to the new suite of active ETFs that you just launched. What would you say sets it apart from what's currently out there on the market? What makes your approach so unique, and why should investors pay attention?
Sure. So again, we're doing real estate, preferreds, and natural resource equities. The first thing is we have a long-term track record of delivering outperformance in these areas. This is not like large cap equities where there's a lot of data that says, hey, active managers haven't delivered. These are areas where we and active managers, but we in particular, have delivered outperformance alpha, which ultimately is what matters for investors. So really that's the first thing. The second thing is for our US and preferred strategies, it's going to be a broader universe than what currently exists for our investors. So it's not going to just be a US-centric strategy. It's going to have a more global opportunity set. We're a firm that has big investment teams. We feel like those are global opportunities that we can bring to end investors.
Speaking of opportunities, obviously with opportunities come some challenges. What should investors be on the lookout for the rest of 2025? What should they be prioritizing?
Sure. So, I think we're all following all the time, whether it's interest rates or tariffs, immigration, lots of policy moves here or there. And of course, different factors to consider are going to impact different kinds of asset classes. I'd say the big rise in interest rates that's happened the last few years, it's hurt some of our asset classes maybe more than others. So that's in the rearview mirror. But things like immigration and tariffs, which of course we all follow, the reality is for what we do, those are not things that are going to have big negative impacts for things like real estate or infrastructure or preferred. So, those are all things I think people need to consider, but some are going to impact certain asset classes and sectors more than others.
Well, it's something that we need to be paying a close attention to. Thank you so
Sure.
much again. John Shea, he is the Chief Investment Officer at Cohen & Steers. Now, after the break, Compass CEO Robert Reffkin is joining me live in studio to discuss the latest trends across the housing sector and what's next for the industry. So stay tuned. Here at Money 2020 in Las Vegas, one of the big key topics of today's discussions and panels, obviously, with blockchain, cryptocurrency, and the regulation around that. Talk to me about what you're seeing right now in the sector.
I think that the sector is definitely maturing, at least globally, to the point of mass adoption. Of course, like we've been seeing this first and foremost in crypto adoption globally, that I think outside of the US, we are seeing a lot of countries, whether it's Europe, Latin America, and Asia, putting fairly good regulation in place. And on the back of that regulation, we are seeing a lot of adoption. I think that the most interesting part right now is that we are seeing a lot of adoption of stable coins for payments, which is very relevant for this conference, of course. But on Fireblocks, now more than 50% of the volume that we are processing, which is about this year, we're going to process $2.5 trillion worth of assets that are going to move through the platform. More than 50%, so 1.25 trillion, is actually stable coins, which is used for international cross-border payments.
Can you tell me more about what your expansion plans are from your vantage point, especially when it comes to DeFi?
DeFi has been at the forefront of what we were doing at Fireblocks. We have several hundreds of clients that are interacting with DeFi through the platform because it gives them better liquidity, better opportunities. And what we are been doubling down on is two main things in DeFi. The first one is to provide secure access and to enhance the security around DeFi. So as most people that are somehow familiar with the space, a lot of the hacks and a lot of the issues that we were seeing in crypto are related to DeFi. So creating the perimeter around the security and compliance that such that it's...
And you just look at me. Welcome back to NYSE TV Live. I'm Trinity Chavez. Now, the real estate market is constantly evolving, with rising mortgage rates, shifting inventory, and new technologies shaping the way that we buy and sell homes. Today, I am joined by Robert Reffkin. He is the co-founder and CEO of Compass. Fresh off of the Bell podium, he was also our bell ringer today, opening up the U.S. equity markets. It's a pleasure to have you in studio.
I'm glad to be here. Thank you.
So you were here 4 years ago when you went public with us. Now being back on that Bell podium, how does it feel?
It felt good. We went public before the housing market turned, and right now the market is starting to come back. We're seeing signs of life, so it feels good.
What would you say sets Compass One apart from other competitors on the market right now?
Yes, so at Compass, we are the largest brokerage firm in the country by sold volume. We have nearly 40,000 agents combined. We have invested $1.7 billion in technology for our real estate agents that puts all of their tools into one place. It's an end-to-end platform where the average agent in the country has to log into 11 different tools to do their job. At Compass, they can log into one.
But let's talk more about Compass One. What would you say was the motivation behind creating this platform? What are you trying to achieve?
And so Compass One was launched this week, and it's our first entry into the the consumer experience, where it gives the end-to-end product to them that we've given to our agents. So it provides 24/7 transparency into every step of the process, before, during, and after the transaction for buyers, for sellers, and owners of multiple homes.
And you've often spoke about the power of technology in real estate. How has the evolution of technology, especially AI, how has that shifted the current market conditions?
Yeah, so for AI, we call it AI for AI, artificial intelligence to empower agent intelligence.
Yeah.
Ultimately, agents are at the center of the transaction. They're entrepreneurs, 1.4 million strong, largest group of entrepreneurs in the country. And technology for them, like all professionals in other industries, has empowered them to accomplish more. So we create tools to help them grow their business, better serve their clients, and lower their operating costs.
Can you dive in a little bit deeper on that, about the tools that Compass One offers to both buyers and sellers to make that transaction more seamless?
Yeah, so what it provides, and I became a client of Compass One, which is great. It has a full transaction timeline. So what happens when, before, during, after the transaction? When's the first month payment? When's the second month payment? When's the electrician coming in? When is the appraiser coming in? When do you need to have escrow, title, the loan scheduled? And so a full transaction timeline. The average timeline has 50 different events in it, in tasks. Tells you who's supposed to do what when. Then you have the CMA there, you have all the documents, e-signature, the collaborative search, open house feedback. You have the tours that you visit, when you visited, any comments on that. It really puts everything in one place so that you don't have to have 53 different emails.
Robert, I do want to get your take on the broader real estate landscape right now, especially with rising interest rates and inventory challenges. What trends right now are shaping the broader housing industry for the rest of the year?
So mortgage rates are still elevated. It's been above 7% for the first month of the year. It looks like today we'll dip below 7% for the first time. The 10-year is down around 6 basis points today. I would expect this year to look a lot like last year. Last year, we saw 4 million homes, existing home sales. That was the lowest level of transactions in 29 years. The price was up 6% last year. This year, I would expect the price to be up 2.5%.
And what should be on investors' minds, especially those who are not only looking for maybe their first home, but maybe for an investment property?
If you're an investor looking for an investment property, what should be on your mind is finding a great agent, and I have 40,000 of them for you.
Amazing. Well, thank you so much for joining us today. It was a pleasure having you on the show, and congratulations again.
Thank you.
Again, that was Robert Reffkin. He's the co-founder and CEO of Compass. Now here on NYSE TV Live, we're not only celebrating opening bells, but I do want to send things over to my colleague Kristen Schuller, who has more about a recent closing bell that took place at the NYSE. Kristen?
Trinity, you're exactly right. So on Monday, Easterly Government Properties rang the closing bell to celebrate a decade as an NYSE-listed company. And I had the chance to speak with the company's CEO, Daryl Crate, about the significance of the moment and the opportunities that he sees during President Trump's second term. Let's take a look.
It's a really exciting day for everybody at the company. I mean, Easterly Government Properties has been serving the government mission 10 years as a public company. We built our enterprise starting from zero. We now manage 10 million square feet. It's taken 10 years and we have 100 buildings. And what we do is we find the most mission critical buildings that support the government mission for agencies that folks in America would expect, for service to be provided to them. These are specialized facilities. They're for agencies like the FBI, like the DEA, and we really provide a public-private partnership to the U.S. government to provide the best facilities so they can do what they need to do.
As we start 2025, how does the business environment for your publicly traded company look?
Yeah, it's a great environment because I think we're coming out of what's really a real estate depression, and we have terrific assets. We're able to generate some strong cash flows, and we can deliver those cash flows to investors with a very high credit tenant.
And in terms of what this new administration means for business, how have some of the agencies and initiatives impacted the way that you are strategizing for what's ahead?
Yeah, so DOGE is one of the biggest changes with the Trump administration, as we see they're moving at light speed. But as we're sort of fond of saying, we've been practicing DOGE before DOGE, finding the most mission critical facilities, finding them not be wasteful, and bring our sort of private sensibilities to the U.S. government to make them more efficient.
How does that impact your investors who might be watching this interview and probably are cheering you on as you celebrate 10 years since your IPO here at the stock exchange?
Yeah, no, I think it's an exciting time for them. The dividends on our stock are backed by the full faith and credit of the U.S. government. It's a really exciting time for us to continue to grow. And I think with DOGE, this new administration, and how we're looking forward, it's a real opportunity for government to sort of do its best for the people. And we're excited to support them in the real estate footprint to do just that.
How flexible is your company in the wake of changes that might occur ahead?
Yeah, we have a terrific leadership team. They're all here today. You're going to see them up on the podium. And they're very excited to grow, build, and do all the things that we need to do in order to support the growth of the company.
What else can we expect for 2025?
Yeah, we've changed a little bit our strategy. We're starting to also, purchase state buildings and local buildings and, as well as government adjacent buildings. Those buildings really provide a terrific lease structure for us, but they're just like the buildings that we've always been managing for the U.S. government. And I think investors are going to be really excited to see the earnings growth that comes from that initiative.
How often are you on the ground at these properties, Daryl, seeing how they're transforming over time?
Yeah, because every week, and I think our closeness to the building is what enables us to best serve the government. It's why we think we're the partner of choice to the U.S. government, and we bring the sensibility of private real estate to them while they're trying to satisfy a mission for the American people.
Now, when it comes to the administration, Elon Musk does head up DOGE. Are you in communication with him?
Yeah, we're working with the folks at DOGE. We're big fans, cheering them on, and we've got lots of ideas to save tens of millions, if not hundreds of millions of dollars for the U.S. government. We've been spending years making suggestions to them about how to move faster, quicker, better, and we're really excited to have a great year like Elon's to be listening to what we're suggesting. I think we all should be grateful that we have a guy like that tinkering with the government for a little bit, and I know it's going to be more efficient for the effort.
We've talked about what 2025 has in store holistically over these next 4 years, the term of President Trump as his second term. What do you see as opportunity over that 4-year span?
Well, I think if government really focuses, for example, in one of our facilities, we tracked down the Sinaloa cartel. Fentanyl deaths over the previous 4 years have nearly doubled, with 72,000 people dying every year from fentanyl poisoning. And it is, it needs to be addressed, and seeing the resources get to the folks, who can arrest these kinds of problems is going to be exciting, and it seems that's what the Trump administration's doing.
All right, thanks again to Easterly Government Properties for that interview. Well, before we go, let's share what happened on this day in history at the New York Stock Exchange. For its first 73 years, the New York Stock Exchange operated out of rented facilities. One was the Merchants Exchange, which sat at 55 Wall Street and served as New York City's commercial hub. That was until it burned down entirely in the Great Fire in 1835. The reconstructed second Merchants Exchange opened 7 years later, and on this day in history, on February 5th of 1842, the NYSE leased the large hall in the new building for an annual rent of $1,500. The second Merchants Exchange still stands today at 55 Wall Street, just east of the present home of the NYSE. All right, well, we have just a few moments left in today's show. Of course, the market's just taking a pause at these current levels, comes as earnings continue to roll in from major corporations, and we'll hear from Amazon, one of the Magnificent Seven stocks, later this week. Jobs data still very much in focus with that non-farm payrolls report on Friday. That will cover the month of January. And on top of that, continuous updates in trade policy. We'll continue to cover it all here on NYSE TV Live, as we always do. I'll be away on Thursday and Friday. Trinity will have you covered. There she is. Trinity, we're looking forward to it.
Thanks, Kristen. That's right. Well, thank you so much for watching. And, make sure to tune in to tomorrow's show at 9 a.m. Eastern.
Have a great
being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing.
This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.